The VIX pulling back today after hitting its highest level since April of 2020 on Monday, almost at 100. But your next guest says volatility remains a big risk across nearly every asset class. CBOE, not the CBOE, CBOE, head of derivatives. You like that? Market intelligence and vice president Mandy Xu joining us now. Can you first explain, Mandy, why did we go from like a 16 VIX to an 86 VIX? Because the job market missed and there's some carry trade problems.
Yeah, so I would separate what we saw on Friday versus what we saw on Monday. I think there's two distinct stories going on. So Friday clearly was a macro fundamental driven move in the market based on a weak U.S. payrolls data. Now you can argue maybe the recession trade was kind of maybe overdone. But what we saw Monday, I would say, was completely divorced from fundamentals. It was pure positioning. You can tell because on Friday, the spike in volatility we saw in U.S. markets, in European markets, across regions. The price action we saw on Monday was primarily Japan and U.S. tech, so the most crowded names.
I know we call it the fear gauge,
yes,
but it's really a measure of options movement, right?
Correct,
and spreads and things like that. So, but yet, if there's, you got a lot of stuff going on with Iran right now, it's a very scary time in the Middle East. That's what I think of the VIX as being. So can you dig a little more into why did the price and market action cause the quote-unquote fear gauge to rise like that?
Sure. So part of it is the fact that the underlying S&P index started moving a lot, right? Like pre-open and then on Monday.
So blew out option spreads
so going forward, that there's an expectation that the volatility could persist. So the forward-looking option pricing is embedding more volatility. But on top of that, the VIX also measures relative demand for puts versus calls. And what we saw over the past 2 days is a significant increase in hedging demand and put demand. And that left tail, which traders for the past year have kind of neglected. Everyone's been focused on the upside risk in the market. That left tail coming back into play, I think, explains a big part of the rise in the VIX.
Mandy, one of the great, a lot of people have embraced this sell volatility trade. People sell vol because they're getting paid to sell vol. The market never goes down. They earn the premium. They're fine. That has a lifespan. And I think to a certain extent, we saw the flip side of what could happen when you short volatility over the last couple of days. Speak to that.
So I would caveat that because I think a lot of times when people talk about short vol trades, they're really talking about option income trades, right? So people who are selling call options for income for their portfolio. That is not a short vol trade. That's an income generating trade. And I differentiate that because for those trades, there's no embedded leverage.
True.
Monday was all about a deleveraging event, a positioning washout for people. If you're just an investor who sold a call on top of a stock that you owned or your equity portfolio, you did great, right? Like you didn't do great in your equity portion, but you collected that premium. Your option portion was not what was losing your money. So I would think I would really differentiate that. And that's where the growth that we have seen in the options market is really on that. It's more conservative strategies that are not levered. So I don't think, in my opinion, that was not what the catalyst or the center of the storm. Yeah.
So you talk about the skew toward puts changing. Can you give us some context where that is now and where it was at the low, where you think it might go also?
Yeah, sure. So, I would say that the theme of the past 2 years and the lead up to this past week has been incredibly low skew in the options market, particularly for S&P index options, meaning no demand for puts and everyone's kind of chasing the upside, right? So that's something we've highlighted for a while. Now that's reversed very sharply to levels basically we haven't seen since COVID. And I think that's a function of people waking up and realizing, A, recession is back, right? The recession fear is back, but also just this unknown about how, like, what positioning unwind is left in the market, how much unwind of this
Well, how much do you think, Mandy?
So what I can tell you, again, what I can tell you is if you look in the FX market, the volatility for dollar yen, for example, it has not come back down much at all, right? The VIX has retraced quite a bit of its move from Monday, not in the FX market. So at least in the FX market, people are pricing in continued volatility going forward, which would suggest that potentially we could see more on.
Well, Karen, you said at the top of the show. Took years to build this yen carry trade. It's not going to be over in a day.
No. There's, more Mondays to come.
That's right.
So that's where we're seeing some divergence.